What's up everybody, Nate here. So a little bit of change of scenery today because I'm currently visiting Key West, Florida, but I want to kind of update you guys on what's going on. So the CPI report, or Consumer Price Index report for inflation, came out today, and it actually showed that inflation in the United States was rising. The Dow estimates showed that inflation was supposed to go down in May, but it's kind of going up a lot. This all comes after the Federal Reserve has been raising interest rates and eliminating a lot of its monetary policy. So I want to go over the numbers and kind of break down exactly what's going on with inflation in 2022. So let's get into the numbers. Headline inflation in May 2022 actually rose by around 0.3%. It's up from around 8.3 to 8.6% month over month from May. And that is a measure of all of the goods and services in our economy. So that basically breaks down how things are changing in price every single month. Now, that is not the key metric that the Federal Reserve uses to look at inflation. They look at something called core inflation, which basically shows everything except for food and energy in our economy. But that actually went up as well. Core inflation rose from 6% to 6.2% in May of 2022. Headline and core inflation both jumped astronomically from what the Dow Jones was expecting. So this is a really big jump, and I want to go over the rest of the numbers right now. So shelter costs rose by 0.5% in May and are now at 5.5%. That is the highest they've been in a very long time. In addition, we have food going up as well. This was one of the biggest jumps on the index. Food actually rose by 1.2% and is now sitting 10.1% higher than it was a year ago. In addition, energy is one of the biggest things on the Consumer Price Index, and it actually jumped a whole lot in May. It went up by a whole 3.9% and is now up by over 34% year over year. And that includes a lot of different things, including gas prices. Gas prices, if you can believe this, actually jumped by 16% in May and are now higher by 106% for the entire year. And because inflation is so high right now, real wages are actually down too, which means workers are suffering all throughout the country. Real wages actually dropped by around 3% year over year, according to this recent Consumer Price Index. So what exactly does this all mean? Well, I mentioned at the beginning of the video that the Federal Reserve has started to raise its benchmark interest rates. Back in March, they raised them by 25 basis points, and in May, they raised them by 50 basis points. The whole goal was to kind of eliminate a lot of demand out of our economy. Demand for mortgages, demand for auto loans, pretty much anything that you need to borrow money, so that way people had a much harder time spending money in 2022. If there's not as much money circulating throughout our economy, well, then the hope is that inflation is going to come down. But the big issue that we're seeing right now is that even though they're getting aggressive with their rates, inflation is still not coming down. So this kind of begs the question, what exactly the Federal Reserve is going to do during its FOMC meeting in June 2022. I anticipate they're going to have to get a little bit more aggressive with inflation. They're probably going to have to raise their interest rates by 75 basis points, which is something that they have talked about recently because inflation is so high right now. That is going to hit everything hard in our economy because, like I said, that sucks out demand for just about everything. We're already starting to see the housing market cool off because of the Federal Reserve interest rate hikes, and the stock market is reeling because they are rolling off their entire balance sheet. So they're not reinvesting all of that billions of dollars that they were pouring into the New York Stock Exchange. And finally, we're probably going to continue to see this inflation problem in the United States for the foreseeable future. The reason is most of our inflation issues are coming from the supply chain problems that we have from the pandemic, and of course the war between Russia and Ukraine, and also lockdowns in China. All of those things are making it so businesses in the United States can't get the resources that they need in order to produce the products that we have on shelves. That is a big problem, and it's something the World Bank is especially worried about right now because we are about to face a stagflation issue that we haven't faced since the 1970s. That's basically when inflation is going way up, but your economy is going down. GDP actually shrank in Q1 2022, and economists are worried that the same thing is going to happen in Q2 2022. The reason is consumers just simply can't buy things right now, and even when they go to try to, things are really expensive and wages are going down because they're being eroded by inflation. The Biden administration has done what they can to improve the supply lines, but there's really not much the Federal Reserve and the federal government can do to improve supply chains. That's because most of it is overseas and they can't control what other countries do with their supply lines. They can only have some influence over private industries in the United States. So that basically creates a really serious problem because the Federal Reserve is raising interest rates, and they're probably going to have to get more aggressive because what they've already done is not working. We actually did see the CPI go down in May 2022 based on April numbers because President Joe Biden was pulling a ton of oil out of United States reserves so people could use more gas. That actually lowered CPI because now there was just a whole lot more oil for people to use, and that was a temporary fix because the CPI for energy actually controls around 33% of the index. But that all basically stopped, so now you have oil and gas prices going way up, supply chains getting really thin, and businesses not making as much on sales because consumers don't have as much money. We actually are going to see the Consumer Sentiment Index from the University of Michigan come out today, and that will kind of reveal how consumers are really feeling about all of these price hikes. But I have a feeling that that is going to go down because inflation is so high right now. So the key takeaways here is that inflation is unfortunately rising still in the United States. This comes after aggressive Fed measures and, of course, them eliminating a lot of the stimulus in our economy, all while real wages are going down, supply chain issues are getting worse, and the cost of everything is rising, from food to energy to, of course, gas prices. So expect to see a much more aggressive Federal Reserve come June 2022 at their next FOMC meeting, and expect this inflation problem to not go away anytime soon, which means we're probably going to see more volatility in the stock market because there's a lot less consumer spending and liquidity. But that is all for now, guys. Thank you so much for watching, and I'll see you all in the next one.